Hi, my name is Forrest Ross and I'm a certified financial planner. Thank you for tuning into this webcast on strategies that seek to improve your overall credit score. This is one of my favorite topics because it impacts every one of us in such a fundamental way. Our credit score is essentially the financial world's way of answering one key question. How financially reliable are you? The answer to that question has repercussions that impact every facet of your financial life. For example, your mortgage rates, credit card interest rates, loan interest rates, insurance policy rates, and even getting that job offer you've been working so hard for could be affected by your credit score. A high score equals lower cost of living, higher quality of life. A low score equals higher cost of living and lower quality of life. With all that being said, I think we can all agree this is a very important subject. So let's jump right in. Today I'll be providing you with 3 simple and powerful ways that aim to lead to a higher credit score, along with some suggested strategies for pursuing success. First, pay your bills on time. Second, stay below your credit limit. And third, review your credit report annually to fix any errors or inconsistencies. As you can see, there are 5 core areas that make up your overall FICO credit score: payment history, amount owed, length of credit history, types of credit use, and new credit. Payment history and amounts owed are the lion's share of your score, which is why we'll focus on those today. But let's start with a first rule of thumb: pay your bills on time. Your payment history typically has a 35% weighting on your overall credit score and is essentially your track record of financial and payment reliability. The better your track record, the better your score is likely to be. Payment history is typically reported for 7 years, or for 10 years in the event of personal bankruptcy. I'll give you a couple of strategies for furthering your success. 1. Get caught up with all of your payments that are due. I recommend calling your creditors and confirming the amount that's needed to get you up to date and current. Then, while you're on the phone, share your goal of becoming up to date and current and wanting to improve your credit score, and ask if they'd be willing to help you along your way by removing any previous late payments from your credit report. I've found that sometimes a little heart-to-heart can go a long way, and it's a win-win for you and the creditor who really just wants to make sure that they get repaid. 2. Leverage online banking to set up bill payments automatically. The less opportunity you give yourself to forget to make a payment, the better. I recommend perhaps even going the extra step and setting up an account that is only used for paying your bills. Deposit what you need to meet your obligations for that month, then set up your automatic payments, and then rinse, wash, repeat, and see a positive credit history unfold. Next, stay below your credit limits. This is known as credit utilization. Creditors want to see that you are using your credit responsibly. A credit utilization rate of 30% or lower is really the goal. The closer to 0, the better. But a 30% or higher rate could indicate that you might be a financial risk. Quick example: if you have a $10,000 credit card limit, avoid carrying balances of $3,000 or greater. Here are some further strategies. 1. Call your credit card company and request a credit line increase. But don't use it. This isn't a time for a shopping spree, it's a time to be credit savvy and see your credit score go up. Decreasing your credit utilization rate will typically give you an immediate boost in your month-to-month credit score. Also, when you request an increase, confirm if the credit report inquiry can be put on a soft pull so that it doesn't impact the credit on the new credit side of the equation. 2. Pay more towards your high credit card balances if you're able to, while still maintaining the minimum obligations on the other cards. You could also consider consolidating your credit card debts with a personal loan, but be sure to shop around for the best rates. You really want to lock down a rate that is considerably lower than your current credit card rates, and also ensure that you can remain committed to paying these down and not run up your credit card balances again. Remember, this is not a time for a shopping spree. It's time to put into practice your newfound financial savvy. Lastly, reviewing your credit report annually, checking for errors and inaccuracies, and then disputing them. Errors can have a serious negative impact on your overall credit score and can be such things as erroneous accounts being listed, inaccurate payment history, incorrect credit card balances, and stale or erroneous negative information. So here are some strategies for pursuing success. Obtain and review your credit report free using annualcreditreport.com. You can access your report from the top 3 credit reporting agencies, Equifax, Experian, and TransUnion. Check them all and ensure that they display consistent and accurate information. If you spot anything that you can dispute each item online, be sure to provide detailed information as to why the report is wrong and evidence to back up your claim. They then have 30 days to respond, or else that item must be removed from your report. Also, sign up for credit monitoring service like Credit Karma. It's free and it allows you to get a helping hand to track changes to your credit report in real time, in addition to providing you with free credit fraud protections. So, to sum it all up, remember these 3 simple steps. Pay your bills on time, get current, and set your payments on automatic. Lower your credit usage by increasing your lines of credit, paying down balances, and consolidating. Keep your utilization below 30%. And review your credit report for accuracies annually and dispute any items. Take immediate action on these steps today, and you will be well on your way towards improving not only your credit score, but your overall financial fitness.